Good morning. It's Jeff Christian from New York at CPM. November 30th, it's Monday. We've had a nice long weekend in the United States during which a lot of people moved around and spread their viruses. So we'll see how that's going to shake out in the next couple of weeks. That's actually central to our view of gold. The gold price was $1,850 not long ago, $1,900 not that long ago, a couple of weeks ago. We had thought that it was vulnerable to a spike down. We said that 1750 was the first stop. There's also technical resistance at 1700, 1680, all the way down to 1650. And we had said when the price was 1850 that we wouldn't have been surprised to see a $200 drop to around 1650, pointing out that if you go back to early August when the price peaked at $2,090, over the following 4 days, the price had fallen more than $200. So the idea of a measured move taking the gold price down from 1850 to 1650 didn't seem out of the question, especially given the preponderance of technically based and price chart based trading on the COMEX contract. So we're at 1760. 1750 is likely to be tested over the next few days. The December COMEX gold futures roll is largely behind the market. As of Friday, there's about 4.5 million ounces left in the December contract. Most of the 40+ million ounces that had been in the December futures contract at the beginning of November has now been rolled into February as people sort of decided that any denouement in the gold price is probably going to be postponed past December. That makes the gold price vulnerable. There is what we think is a lot of misplaced optimism about the state of the economy and the state of the political world, both on a global basis and in Europe and in the United States. We think that that misplaced optimism will weigh on the gold price over the next week or two. And in the absence of a December roll being behind the market now, we do think that the gold price has some further downward potential, 1750, 1700, even 1650. Our advice, as you can see here, a week ago on Tuesday through our trade recommendations was to stand aside and wait for the gold price to bottom out. We had said that we thought that 1750 was the first stop, but we pointed out that 1650 was possible. Our advice today would still be to stand aside as a long investor and wait to see the price really show signs that it has stopped falling before one start to buy again. We do think that the gold price will rise and will rise sharply in 2021 and beyond. We think that the optimism about the political environment is misplaced. We still have Brexit coming up, and there's really been no real progress in that. In the United States, we will see a stalemated government. We're not going to see any economic stimulus as long as the Republicans control the Senate. And that could be for another 3 years at least. So I think that you're going to see a stalemated economic policy. You're going to see stalemated government. You're going to see Republican intransigence when it comes to late January and it's time to start approving Senate cabinet positions that require Senate approval. We think that you'll see a stalemated government. You're going to see the Trump administration taking steps to sort of sabotage the economy, pandemic relief efforts, and other social and political issues. We're already seeing that, and it's going to get worse. We're also seeing assassinations that have the wink and a nod approval of the United States government. You're going to see more and more problems as the Trump administration, A, seeks to achieve what it wanted to achieve before it leaves office, and B, sets up a sabotage for the incoming Biden administration. The withdrawal of the $455 billion that the Fed was sitting on as part of the CARE package and the demand that it be returned to the Treasury is a sign of economic sabotage. They're setting us up to have troubles in 2021 and beyond. And we will. And those problems politically will have economic consequences and financial market consequences, and investors will invest in gold. So we do see the gold price is vulnerable to some further downside moves. We're not quite sure where it stops falling, but at some point, possibly 2 weeks from now, possibly a month from now, possibly in January, we think that what we consider misplaced optimism politically and economically and regarding the pandemic will be replaced by a new wave of realism, which will see investors coming back into gold and the gold price rising again. That's what we have for today. Stay clean, stay away from people, and we'll talk to you soon.